Okay. Uh, I will discuss in this video question number 4 part B 2020 question paper advanced level accounting local syllabus. When it comes to paper 2 question number 4 part B regarding primary books and ledger accounts, regarding preparing primary books and ledger accounts. Here 2020 question number 4 paper 2 part B. Sumudhu PLC is a trading business and it is registered for value-added tax VAT. The company purchases goods only on credit basis and sales are done on both cash and credit. The following information has been extracted for the debtors and creditors ledgers of the business for the month ending 31st March 2020. Then here you are given details as at 31st March 2020. You are given debtors ledger as at 31st March 2020, rupees in thousands. Then you are given description, debtors name. There are 3 debtors. Right. Then actually, even at the examination, it's original paper. Therefore, here you are given some balances regarding debtors and creditors ledger as at 31st March 2020. You are given some details regarding creditors, some creditors. And also again, they have mentioned the total of debtors and creditors ledger balances list as at 1st March 2020 agreed with the respective control accounts balances on this date. That means no problem at the beginning of the month. No problem at the beginning of the month. They have got agreed debtors and creditors ledger balances list with the respective or relevant control accounts. That means list of debtors personal accounts total is agreed with the debtors control account balance as at 1st March 2020 and creditors personal accounts list total is equal to creditors control ledger balance as at 1st March 2020. But after that, there are some transactions occurred here. The cash account balances as at 1st March you are given and some other details you are given. Then finally, they have mentioned the credit balance of VAT control account as at 1st March 2020 was 40,000. Assume that there is no VAT on other expenses. Ignore the date of the transaction. That means sometimes at the examination, you are given the date the transaction occurred. But here they have asked you to assume that there is no dates VAT on other expenses. And also they have mentioned no VAT on other expenses. Ignore the dates of the transaction. That means for normal expenses, no VAT. And also we don't need to consider dates. Then finally, you are asked to prepare the following primary books for the month ending 31st March 2020. Purchases journal, cash receipt journal, cash payments journal. If we just look at 2019 paper, we had made the same thing. That means currently examiner gives the priority to practice primary books and preparing ledger accounts. Here, the same question, even in 2019, we had met. And also the following accounts for the month ending 31st March 2020. Cash account, debtors control account, VAT control account, salaries control account, EPF payable account. Likewise, you should know how to prepare primary books clearly and how to post transaction from day books or primary books to ledger accounts. Here you are asked to prepare 5 types of accounts and also 3 types of primary books. Okay, when you meet these type of things in your paper, what you have to do is you have to read the question and first prepare the formats for you to enter the given detail. Then you have to draw purchases journal first, cash receipt journal first, and cash payments journal. I will just show the things what we have to draw. First, you have to read and draw the relevant formats like this. This is the format for purchases journal. Date, description, amount column, VAT column, and total column. If there's no VAT, you can ignore VAT column and you can take other description, amount column, and other or total. Then when it comes to cash receipt journal, you can take date, description, discount column, that is discount given, allowed, amount, and at the end you can have analysis columns. Here sales, cash receipt from sales, cash receipt from debtors. Here you can have separate column for VAT, but sometimes other income like that, depending on given details. In the question, you can take another column, other income, receipt from other income. Then here cash payments journal, you can prepare date column, description column, discount received. Here they have just mentioned, but you can mention discount received, amount, and again, even in the cash payments journal, analysis columns, creditors, payments to creditors, payment for expenses, and other. Right. Likewise, you can mainly prepare these things. At the examination, you have to manage your time. Otherwise, within 3 hours, you won't be able to finish the paper. Even though you have got options, you have to complete the given questions, required number of questions at the examination within 3 hours. Therefore, first you have to draw those 3 formats. You can ask number of papers and you can draw first. And secondly, you can draw ledger accounts. That is the answer for part 2. Cash control account like this, just P account, and debtors control account like this, and also VAT control account, and again salaries control account and EPF payable account. Likewise, you can first draw primary books formats and name. Secondly, you prepare ledger accounts by taking space. Right. Then we have to first prepare the primary book. Secondly, we can post transaction from day books to primary books to ledger account. Right. Then we can first prepare purchases journal. Then what is purchases journal? Purchases journal is the primary book which is used to record goods purchased on credit for resale purpose. Therefore, we can't enter what we have purchased in cash, or we can't record details regarding non-current assets or fixed assets purchased on credit. Therefore, we can take details regarding purchases day book from the given opening balances, and we have to first take creditors ledger as at 31st March 2020. Here you are given some details regarding creditors ledger account. Then you are given description, name of the creditor. We are having 3 creditors. Then we can first take opening balances. As we are given opening balances, here we have to prepare the things required as at the 1st March 2020, but we consider these are the balances. Right. We are given these things as at 31st March 2020. First of all, we can mention these opening balances. When you take from the beginning to end given details, it is easy for you to complete the question. Otherwise, if you take details from here and there, then you won't be able to finish the question within the required time. Then opening balance in normal traders 100, Gamage traders 50, Nadu traders 150. They are debtors, no? Then we maintain a control account, there's control account to represent individual debtors. Therefore, we don't prepare these personal accounts, we prepare only here debtors control account, then the total is 300. Then we can mention the total in the debtors control account. Here we have prepared the ledger account, debtors control account, asset. When you prepare this account, we apply the asset concept, increase debit, decrease credit, and also it is equal to preparing individual customers account or debtors account. Only thing is we record here total values related to all the customers. Then debtors control account represent all the individual customers they are positioned. We have to apply here asset concept. Opening balance 300, broad balance you can mention 300. Right. Then we come to sales including 8% VAT. We are given, this is actually credit sales. They have given you the values with VAT. Therefore, 8% is equal to VAT. 100 equal to net sales, total value equal to 108. Therefore, no sales for normal traders, but Gamage traders we have 324. Nadun traders 486, total 810. Then, for to prepare sales day book, we can take these details. But here we are not asked to prepare sales day book. Therefore, we can directly take the values to the debtors control account, 810. Here, 810 is the total debtors credit sales, but it is included 8% VAT also. Therefore, we can record these given balances without VAT and VAT amount separate in the debtors control account. Here, 810 is the total sales value credit sales, but we can separate. We can divide 810 by 108. That is 100 plus 8% VAT. It is equal to 108. 108% equal to 810. Then you will take net sales 750. We debit to debtors control account. And VAT we debit separately again debtors control account 60. The total of these two, 750 plus 60 will be equal to 810. Right? Then if you pass a double entry, here debit 750 and credit to sales account. Here we are not preparing sales account because we are not asked to prepare. If you prepare it, it will take time. And VAT we have separately, this is called output VAT, what we charge from customers. Therefore, 60 we can credit to VAT control account here. Debtors control saying 60,000. Here all the values in 1,000 rupees we can indicate in each and every account rupee symbol and 3 zeros comma. Then debtors control 60. Right. And if you prepare sales account we can credit 750. Right. Then third value, cash receipt. Here you have mentioned cash receipt within bracket under each debtors. Then here we are preparing cash receipt journal. Therefore, we can take total cash. This is 625. We are not preparing individual customers account. Therefore, we can take total of the cash receipt journal 625. Then cash receipt journal you can take here 625. Normal traders, you have got 75. Damage traders, you have got 50. Sanun traders, 500. Here you are given what we have received from each customers. No, 75 from normal traders, Gamage from Gamage 50, and Nadun traders 500. Then in the cash receipt journal, you can mention what we have received from each customers. Here, description, under description, normal traders 75 in the amount column, Gamage traders 50, Sanun traders 500. Again, what we have mentioned in the total column, amount column, you have to include in the analysis column. Under analysis column, we have sub columns called letter. That is how you have to prepare cash journal. What we have to enter in the amount column, again you enter into the analysis column letter, right? Like this. Then here they have mentioned discount allowed. Discount allowed 5 from normal traders, 10 from Nadun traders. You know, the business has given discount, let's go discount allowed to given 5 to normal traders, Nadun traders 10. The total 15. Therefore, you can mention those discount allowed in the cash receipt journal because that is cash discount. Normally, we don't record trade discount in ledger accounts or anywhere, but we record cash discount in the day books. Therefore, here normal traders in the discount column 5 to smooth traders 10. Right. Like this. No VAT included in those transactions. Right. Then, when it comes to total, you are given sales total 810, cash receipt total 625, discount alert total 50. Therefore, we can include these things in these two total values separately in the debtors control account because we normally enter in control accounts total values, but we apply the concept, same concept what you have to apply even for an individual customer. 625 is what you have received from all 3 customers. No, you can credit because when you receive money, you debit to cash account, credit to debtors control account. When it comes to debtors control account, likewise here cash 625. Discount allowed 15. This 15 will be 5 from one customer, 10 from another customer. That means business has given them a discount. Right? Here we enter total values in the control account. Therefore, discount allowed total, you credit here, discount allowed account debit. Here we don't prepare discount allowed. It is included 2 values, 5 from here discount allowed to normal traders 5 and not to Nadun traders 10. Total is there 50. Then here I have mentioned we have credited to debtors control account. Here we apply individual debtors concept same cash account debit 625, discount allowed account debit 15, and here we have credit. Then when it comes to cash account, you can debit debtors control, say debtors control 625 in the cash control account. Then if you prepare discount allowed account, you can debit to discount account, saying sundry debtors, this 15,000 should be debited to discount allowed account. Right. Likewise, you have to take the details and record at all the relevant places. Discount not okay. Then these are the closing balances. Right. Then you can come to creditors ledger as at 31st December. Opening balance here to someone 300, Mahesh 150, total 150. We are not asked to prepare creditors control account, no. Therefore, we don't need to record those things in the creditors control account. Then purchasing including 8% VAT. Here, they have given you the relevant values VAT included. Then these are credit purchases because they have given you under creditors ledger. No? Therefore, for you to prepare purchases journal, we have to take these details. We have to record credit purchases in the purchases label. Right. Then from Saman traders, we have purchased 540 worth of goods from Amal 432, Mahesh traders 260, total 1160, Then we can separate 540 as VAT 8% and net purchases and record in the purchases table. Summon traders, total value 540. Then we can divide this value by 108. What is 108? 100 plus VAT in input VAT 8%. Therefore, it is equal to 400. 540 you divide by 108 and multiply by 100. It is equal to net purchases amount. And if you multiply by VAT portion, then you take again VAT 40%. Right. That is summon traders. Then when it comes to Amal traders, 432. You can do the same thing. Amal traders total 432. That is equal to 108. That is per net purchases plus VAT, input VAT. It is equal to 110. Then divide by 110 and multiply by 100. That is 400. Then balance will be equal to 10%. That is 32. Next, supplier, Mahesh traders 216. 216 equal to 108. That is 100% net purchases plus VAT 8%. Then you divide 216 by 108. Then multiply by 100, you take 200. Then again, if you divide by 108 and multiply by 10, it is equal to 16. That is VAT. Then you can mention Mahesh traders total 216, VAT 16 and 200 net purchase as well. Right. Then we are not preparing individual suppliers account. We prepare on the general the accounts. Then here, if you take total purchases 1,188, you can net value 1,100. You can debit purchases account, and you can debit 88 to input VAT account, but finally we debit to VAT control account. Therefore, VAT control account debit 88. As we are not preparing purchases account here, we ignore that, but VAT 88 we can debit to VAT control account. Here, VAT total 88, then we can debit VAT control account. As we are not preparing purchases account, we can just ignore 1,100 net purchases then, but we can debit to 88 to VAT control account. That is input VAT we can normally debit here. 88, say in traders control account. Then traders control account, if you prepare, we can credit. Right. Then cash payments 290 to Saman traders 202. Amal traders, Mahesh 150. So we can record these things in the cash payments journal. Cash payments journal separate. Cash payments journal, Saman traders 290, amount net payment 290, again in the analysis column. Here they have mentioned discount received 10 separately. When the business settled due amount before the given credit period, the suppliers or creditors will be happy and deduct some. That is called discount received. It is Saman traders has given 10,000 as discount received to the business. Therefore, again, in the discount column, we can mention 10 related to Saman traders, because the cash payments journal we mentioned discount received also. Then amount, net amount 210 and Again, analysis column under creditors, we have mentioned 290. 290 is the amount paid. Discount received separately 10. Then Amal traders cash payments 200, no discount received. Therefore, you can mention Amal traders amount column 200. Again, under analysis column creditors 200. Then thirdly, what we have paid to Mahesh traders 200, sorry, 150. 150 again, you can mention Mahesh traders 150 in the amount column, and again under analysis column in the creditors column 150. Right. That is how you can record cash payments in the relevant column in the cash payments journal. Right. Then we recorded discount allowed then. So discount received and cash payments. If you prepare creditors column account, we can debit this 650 to creditors column account and 10 again discount received to creditors column account. As we are not preparing, we don't need to record those things. And again, we can pass a double entry. 640 you can credit to cash account. Here, 640. We pass double entry to cash account and the creditors column account. 640 total paid and 640 amount total paid. Here to the creditors. As you don't prepare individual suppliers account, we don't record it. Yeah, they are personal accounts. Discount received 10. We can credit to discount received 10, debit to creditors control account. Creditors control account, discount received 10. And as we are not preparing, discount received account is not there. Right. Then closing balances are there. Then we can record step by step the total of debtors and creditors ledger balances list as at 1st March 2020 agreed with the respective control accounts balances on this date. That means individual customers list, individual value, total of those individual customers values should be equal to debtors control account balance, and also individual suppliers or creditors balances total should be equal to creditors control account balance. No any problem with the opening balances. The cash account balance as at 1st March 2020 was 50,000. In addition to the cash transaction included in debtors and creditors ledger, the following cash transaction was also occurred. We can first record 50,000 opening balance in the cash account. In the cash account, we can mention brought for balance 50. Right. Then the following cash transaction also occurred during the month. We have to record this. Cash sales of the company was 972,000, including 8% VAT. Right. Here, 972 is equal to 108. Why? They have given including VAT. Therefore, 8% VAT plus 100% net sales. Therefore, you can divide 972 by 108 and multiply by 100. The 900 will be equal to net sales and 72 equal to 8% is VAT. Therefore, you can record that one first. In the cash receipt journal, here cash sales amount received 972, net sales equal to 100, divided by 108. 972 divided by 108 multiplied by 100 equals to 900. That is net sales. In the analysis column, the VAT column, you can take 10%, that is 72. Right. Then again, if you pass a double entry, cash sales, you can total amount, you can debit to cash account 900 sales and 72 VAT like that in the cash account. Here 900 net sales and VAT control 72. You have got total from the customers, but we have returned to the government 72, that is output VAT. But in the cash account, what we have received totally, you debit saying separate 900 sales and VAT control 72. Right. Next, paid 552,000 salaries are deducted in 48,000 and employees contribution to employee provident fund EPF. That means are deducting 48,000 as employees contribution to employee provident fund. They have paid net salary to the employees 552. Then we have recorded first in the cash receipt journal. Sorry, recording the cash payments journal. Staff salaries amount paid 552. Again, analysis column expenses 552. They have paid this one as net salary. Are deducting EPF from employees. Then again, you can credit to this 552 in the cash account. Salaries control 550. We pass double entry through cash control account and the salaries account. Then we pass double entry cash as a decreases credit to cash account 550 and debit to salaries control account 550. Right. And as we are asked to prepare EPF payable account, normally we deduct EPF 8% from employee and 12% equal to gross salary from the employer or company or owner of the business and transfer to EPF payable account. And in the following month, we send the money equal to that term from the EPF Act. Then they have deducted 48,000 as employee provident fund and net salary has been given to the employees. But we had to pass a double entry for 48,000, but they have deducted from gross salary. We have to debit to salary control account and credit to EPF payable. Because normally total salary, gross salary, we debit to salary account, that is expense account, salary account, total salary, and credit to salary control account. Normally we debit to salaries account, total salary, and credit to salary control account. This is total salary allowed to the employee 600,000. We normally pass double entry through the salaries control account and here salaries control account and salary expense account. Salary expense account debit and salaries control account credit 600,000. Out of 600,000, they have deducted EPF. Therefore, what you deduct from gross salary, we debit to salaries control account. Right. Then you deducted 48,000 as EPF from employees. Then we debit to salaries control account, and we had to credit to salaries control account. Salaries control account. Right. Salaries control account 48,000. Then what they paid in cash, we have debit to salaries control account, net salary, and credit to cash account. What they have paid, salaries control account 550. What they paid, cash account credit by asset decreases concept, salaries control account, debit, salaries control account debit 550,000. Then EPF payable 8% from employees, salaries control account debit, and EPF payable account credit salaries, saying salaries control account 48. Then, EPF should be paid by both employee and employer. Here they have deducted 48,000, it is equal to 8% from employee, from the employee salary. But normally 12% from gross salary should be paid again as an additional expense by the owner or employer. Therefore, here we are, even though we are not given, they have mentioned the employee and employer contributions to EPF are 8% and 12% respectively. Therefore, 48,000 is equal to 8%. Now we have recorded, but again we had to find 12% equal to gross salary, then record it. Because employer or owner of the business has to pay another 12% equal to gross salary as his contribution. It's also must. Therefore, you can equalize 48,000 equal to 8%. Therefore, you 48,000 divided by 8 and multiply by 12 equal to 72,000. That is employers or owners contribution for EPF. That is separate expenses. That will be a separate expenses for the business. Employers or owners EPF contribution will be separate expense. Therefore, we debit to 72,000 for a separate EPF account, EPF expense account. If you prepare under workings, you can just mention in a T account, EPF expense account. Employers EPF expense account 72,000 and credit to EPF payable account. Credit to EPF payable account. What is double entry? We can maintain the business separate EPF expense account. That is 72,000 and credit to EPF payable account 72,000. That is double entry. This is what the owner has to pay. Business has to pay 12%. It is equal to 12% from the gross salary. If 88% equal to 48,000, you divide by 8 and multiply by 12, it will be equal to 72,000. That is an additional expense for the business. Therefore, EPF expense account debit and credit to EPF payable account. That is how you can pass double entry. Right. Then they have further mentioned remitted 120,000 for EPF and 18,000 to employee trust fund for the month of February. Remitted means they have paid. That means normally EPF and ETF we retain in the business and we transfer, we remit in the following month to the central bank. Therefore, as they have mentioned, they have paid or they have remitted previous month EPF and EPF, what they retain in the business. So they have mentioned for the month of February. Now we are recording this transaction, what has happened in the business in the month of March. But as they have mentioned, remitted 124 EPF and 18,000 to employee trust fund for the month of February. That means normally they remit EPF and ETF, what is relevant to the current month, in the next month or in the following month. Until that, it is a liability. When you pay still no position, we have to record ETF and EPF payable under current liability. What they have recorded under current liability, what is related to month of February, 120,000 EPF and 18,000 to EPF. We have to again record. As they have paid, we have to credit to cash account here. EPF payable, say in EPF payable, when you pass double entry, EPF payable, we have opening balance 120,000. That is related to month of February, previous month. Therefore, we debit to EPF payable account and credit to cash account as they paid in cash. As a decrease concept, therefore, we credit to cash account and liability decrease concept. That's why we have to debit to EPF payable. EPF payable is liability account. Liability decrease concept debit. Therefore, we debit to EPF payable account. Same cash 120. That is what is related to previous month. Then 120. EPF and 18,000 to employee trust fund. Employee trust fund will be separate expense for the business. Employee does not contribute to pay ETF. ETF should be paid by the owner of the business, the company, on behalf of the employee. That is also according to ETF Act. Therefore, ETF paid amount is a separate expense again for the business. Therefore, 18,000 to employee trust fund as they have paid for the month of February. There can be ETA payable account, opening balance credit liability at the beginning. As they have mentioned, remitted ETA payable account debit and credit to cash as they have paid in cash. Here, you can credit to ETA payable, say ETA payable 18,000 to cash account Y as a decreased concept. And if you have ETA payable account opening balance credit, then you can debit to ETA payable account. It is for last month. Therefore, so liability decreased concept debit. Therefore, you can debit to ETA payable account 18,000 and credit to cash account as a decreased concept, say in ETA payable. Here, what we couldn't record is current month EPF employers contribution, 72,000. We already recorded 72,000. So normally we pay current month EPF and ETF in the following month. Therefore, it's a liability. Then 48,000 we debited to salary control account and paid to EPF payable, and another 72,000 we debit to separate EPF expense account and credit to EPF payable account, like this. This is what they have deducted from employees' salary control account, EPF payable by the owner, separate expense. Therefore, EPF expense account debit and credit to EPF payable account. This is current. These two values are related to current month. Then, as we are not asked to prepare ETF account, what is related to 3% from employees' gross salary for the current month, we don't record. If they have mentioned you to record current month ETF, also will be the same. Then we debit to separate ETF expense and credit to ETF payable account. Here we are not asked to prepare ETF payable account, only EPF payable. Right. Then we recorded everything so far. The next paid 250 for other expenses. Then this is cash payment. We can first record in the cash receipt journal. Sorry, in the cash payments journal, because that is expense now. Therefore, here are the expenses 250 in the amount column, and also again under analysis column expenses 250. Then you can again credit to cash account other expenses 250. Then in the previous explanation regarding EPF and ETF remittances, we paid no previous month EPF and ETF. Therefore, we had recording cash payments journals also. Then EPF remittances for the previous month 120 in the amount column, and again under other column 120. ETF remittances amount column 18,000 and again other column 18,000. That is last month, previous month ETF and EPF. When you do the things step by step from the beginning to end, it is easy for you to, otherwise you will forget to take all the details at the end. If you are in a big hurry at the examination, you will forget to take details given in the question. Right. The employee and employer contributions to EPF and 8% and 12% respectively. Further, the employer's contribution to EPF is 3%. Therefore, we have to record what is related to current month 3%. 3%. Last month was 18,000. Then this month also should be equal to salary 18,000. But we have to check here. They had given you paid 550 salaries after deducting 48, no? Then we can check 48 equal to 8%, that is EPF contribution by the employee. Then you divide this 48,000 by 8%, multiply by 3 equal to current month ETF 3%. So we can divide 48,000 by 8% and multiply by 3%. Then you will take current month ETF portion, payable portion. Then ETF expense account debit, and you can credit to ETF payable account, because we are not preparing that account, but if you prepare, you can credit to ETF payable account the relevant amount. Then the company remits EPF and ETF of a particular month on the 5th day of the following month. Therefore, what we paid is related to previous month, February, but we recorded what is related to current month also. What is related to current month will be paid in the month of April. The credit balance of VAT control account as at 1st March 2020 is 40,000. Then you can include as a credit opening balance in the VAT control account. VAT control account broker balance 40. Right. Then our salary control account will be finished. That is agreed. EPF payable account, what you paid is 124 previous month. Then what is relevant for EPF salary control account? 48,000, that is from employee. From the employee year 72 total, what you have again paid is balance carried down 120,000. That is, if you prepare steno pana position, you should record 120 under current liability. The salaries control account 600. This amount came from salaries expense account. Salaries expense account should be transferred to income statement. And VAT control account, here you have credit balance, but carried down balance 84 and but for the liability. When you prepare extended final position, you have to include this 84,000 under current liability. The debtors control account balance will be 470. Therefore, under current assets in the extended final position, you have to mention under current assets just after inventory 470. Then cash balance you have got 67, that is debit balance. Then you can put under current assets. That is the end of part B, question number 4 in the year 2020. Likewise, you can take the given values step by step from the beginning to end and easily prepare the given things at the examination also. Here we are given 26 marks. At least within 45 minutes you can finish this question, because 26 marks means 1/4 of more than 1/4 of full marks, 100 marks is given for this question, part B, question number 4.